Good evening, all the joinees. Hi, this is Ansu. I welcome you all to the NGEN Markets webinar. By the time the others join in, let's have a look at today's webinar topic. So today we would be focusing mainly on analyzing the risk parameters that could be considered while valuing or analyzing mutual funds. Firstly, being the value at risk as a factor, which tells us what is the downside risk of any fund or any portfolio as well. Next, being the capture ratios, which would basically let us know the up capture ratio and the down capture ratio, informing us how the portfolio or the fund performed in comparison to the movement of the benchmark when the benchmark was considerably in a bull run or in a bear run. Next, being the risk versus return scatter plot, which tells us in terms of these two characters, how has the fund plotted themselves in a scatter plot, wherein the x-axis being the risk, meaning the standard deviation, and the y-axis we have the annualized return. Next, we would be focusing on the drawdown and recovery analysis, which basically tells us how a specific fund, or for that matter, a specific portfolio, recovered from any loss that occurred during the time period that we have set in. And finally, we would be looking at the rolling return analysis, which lets us know the consistency of the funds that we have loaded in. Finally, the forum would be open for a Q&A session. If you have any query, you can either unmute yourself or type down your query in the chat box. So let us begin. So this is our NGEN Markets terminal, wherein the landing page is the Markets tab. Now for our first topic, which is value at risk, I just load in a specific fund. So you can just simply use this option of search fund. You can type in the name of any fund or any stock, and then the analysis of that fund or respective stock would show up. So let's say I just type in ICICI Blue Chip as a fund. And the entire fund level analysis is what we can see as of now. So this is a fund, which is a large cap fund, iPro Blue Chip fund. And the analysis or the statistics that we are currently able to see is for this time period starting from 2009 to 2024. Now you can change this anytime. I just click on this change as a button. And let's say I want to run the analysis of this fund for the last 5 years. I just simply click on 5 years ago. So as of now, the start date has been picked up as 30th April 2019 and end date remains yesterday's date. Now this data is basically showing how my portfolio performed in comparison to that of the benchmark. Now here the benchmark as of now, it is Nifty 100 since this is a large cap fund, but you can go forward with any other benchmark that you want to compare the performance of any of the fund against. Now, in comparison to the benchmark, I just locate value at risk, which is right here, VAR. The abbreviation is value at risk. So this basically tells us what is the value of this fund that is at a risk. At a risk of what? At a risk of losing. So there are two VARs that we can see, which is historical as well as implied. So I would explain both. First, I'll go forward with this historical VAR. Now, next to this historical VAR, we can see 95% is what has been mentioned. So this is basically the confidence interval, meaning with a 95% confidence interval, there is a 5% probability that if history were to repeat itself, this fund would go down by a total of 23%, while the benchmark would go down by a total of 27%. Now, if I just put it in simple terms, meaning if 100 rupees is invested in both the fund as well as the benchmark, the capital erosion, meaning the capital going out, would be 23 rupees for the fund and 27 rupees for the benchmark, which is Nifty 100. Now, these two are, which is historical and implied. The method of calculation remains the same. The only difference is the underlying factor that is used for calculation. So while calculating historical VAR, We consider the historical returns for the purpose of calculation. And while calculating the implied VAR, we consider the historical volatility for the purpose of calculation. Now, let's say I just sort funds on maybe value at risk as a parameter. So for that sorting of funds, I go to this fund section, which is basically a screener section wherein you could filter out funds based on your filter parameter. And let's say I just use this query tab. So this is our recently launched tab, which is a much more robust version of this screener tab. Now, let's say I just use this filter parameter, meaning a SEBI category option, and maybe I'll select all the large cap funds. And I click on add condition. So as of now, the first condition that I have added in is a SEBI category of large cap fund, and it says total of 33 funds are the ones that have been found out. Now, let's say I add in another filter parameter, maybe the AUM. So I'll input maybe 2,500 to maybe 55. And I click on add condition. So these are basically in crores. So based on these two filter parameters, you see it has mentioned that there are 13 funds based on the filter parameter, the two that I have input. Now, let's say I add in one more filter parameter, which is the value at risk, which we were understanding right now. So historical value at risk, maybe I'll input it from -28 to 0.27, and I click on add condition. So based on these three filter parameters, it is suggesting that a total of 6 funds is what the platform is able to show. Now, let's say I just click on this show 6 fund. So it would give me the list of 6 funds that are apt as per the conditions that I have used right here in this query section. Now, using this query section, you can just save this condition as per your requirement. You could just click on this save query, give this query a name, and click on save query. So your query would get saved in this section, and any other time, let's say you just log into the platform, you just need to go to this load saved query section, and you would be able to see your list of funds that you had already saved in. So you could just click on this show 6 funds and the fund would show up. Now, let's say I just want to compare these funds with each other. So for that purpose, I need to take the funds to the compare section. And it is very simple to take it from the query section to the compare section. You can just click on this compare icon. So just by a click, the 6 funds directly have moved to the compare section. Now, maybe let's say you just want to delete 1 or 2 funds from this list. That is also simple. You can just click on this delete icon. It gets removed instantly. Now, as of now, the data that is visible in this section is since the inception of each fund. Basically, because I haven't input a common start date in order to go forward with a fair comparison. Now, the method to input a common start date is right here. You can just click on the settings wheel. Let's say I want to run the analysis for these funds for the last 5 years. Maybe I'll input 1st May 2019 and I'll click go. So as of now, the data that is visible is since the custom start date that I have input. And the system also gives us a prompt mentioning that I have input a custom start date. Now the data, we can just sort this. Maybe I just sort this on the basis of this Sharpe ratio. I just clicked on the column heading. The data can get arranged either in the ascending or in the descending order. So the Sharpe ratio, meaning the risk adjusted returns for the fund, it is suggesting that it is highest for IPRU in the last 5 years. Now, let's say I just want to see how these funds have performed in terms of its benchmark. So that option is also available. You can just input right here, add other items. There is an option to search indices. We have a total of 162 indices. You can type in the index as per your choice. Let's say I select Nifty 500 as an index, and it would get added in as a row item. Right here, Nifty has gotten added in. Now, if I just sort this on the basis of its Sharpe ratio. So this is basically suggesting that there are 4 funds that have outperformed in comparison to its benchmark in terms of the Sharpe ratio for the last 5 years. Now, these were all return specific columns. What we have further are the relative return column as well. So for that, I just scroll down and use this scroller button to move towards the right-hand side. So here we can locate in relative returns column, which are currently pink colored, and the data is not showing up specifically in this pink color coded columns. That is because I haven't activated the relative returns column. Now the method to activate is you just need to tick box or rather check on this relative returns column. So once I have checked on this relative returns column, the data has shown up. Now this is against the benchmark Nifty 50, which is a default benchmark that would show up. This can be changed anytime. I'll just input Nifty 100 because what we are focusing right now are large cap funds. So maybe I just take it as Nifty 100. Now the data is showing for the specific funds against Nifty 100. Now the next thing that we need to make sure is that the start date that we input in this relative returns column is exactly similar to the start date that is there in this returns column. Basically, in order to ensure that we run a fair comparison and apples to apples comparison. So I just take it as 2019 May 1st. So right now, this is basically showing a fair comparison in terms of the date that we have input against the specific benchmark. Now we can see in the cumulative excess, which is basically the alpha, how the fund has performed over and above that specific benchmark. Next, what we can see is this beta. So beta basically tells us the sensitivity or the risk of a specific fund when you compare it to that of the benchmark. So beta of a benchmark with itself will always be 1. And a beta less than 1 says that the fund is less riskier than that of the benchmark. Now, if we locate at the beta of all these 5 funds, we can say that these funds are less riskier than Nifty 100 as a benchmark. Now, what we can see right here are the up capture ratios and the down capture ratios. I'll just load in a single fund and just show that in a detailed manner. So I have loaded in iPro Blue Chip in a new tab. Let's say I change the start date to 5 years ago. Now right here, I scroll down and I locate this up capture ratio. So up capture ratio basically tells us how the fund performed when the benchmark was in a bull run. Now here, you can just click on this I button. So while calculating the up capture ratio, we consider only those months wherein the benchmark has generated a positive return, irrespective of whether the portfolio generated a positive or a negative return, because we give in consideration to the benchmark return. Now we consider all these months wherein the benchmark generated a positive return and correspondingly the returns of the fund are also mentioned. Now the total returns for these come as 58.44 for the fund and 58.37 for the benchmark. Now the method of calculating the up capture ratio is simple. The returns of the fund is divided by the returns of the benchmark. And we say higher the up capture ratio, better is the performance of the fund against that of the benchmark. And by higher, we mean more than 100 because we consider the benchmark to be at 100. And similarly, converse is the down capture ratio, which tells us when the benchmark was in a bear run, how resilient was the fund in comparison to the movement of the benchmark. So here as well, I just click on this I button. So here we give in consideration to the benchmark return, meaning we consider only those months wherein the benchmark generated a negative return, irrespective of whether the fund generated a positive or a negative return. Meaning if we just focus on this Jan 2022, you can see that the benchmark return was a negative 0.3%, while at the same time, the fund return was a positive 1.21%. So we have also considered that positive return of that fund because the consideration that we give while calculating the down capture ratio is the return of the benchmark. Now here as well, the method of calculating the down capture ratio remains the same. The return of the fund is divided by the return of the benchmark. And we say lower the down capture ratio, better is the resilience of the fund in terms of movements of the benchmark when the benchmark is in a bear run. Now, all these ratios that we had seen on a fund level is also available on a portfolio level. I could just load in a portfolio real quick. I just go to this portfolio section. I have a portfolio saved on my system. Right. So I just change it to 5 years ago, let's say. Now this data, it is basically showing how my portfolio performed against the benchmark, which is reference index 4. Now this is an auto benchmarking that happens on the platform based on the asset allocation. So reference index 4 stands for 70% Nifty TRI and 30% CISL bond based on the asset allocation of the entire portfolio. Now I could just scroll down. You can see value at risk, historical as well as implied. What we were able to see on a fund level analysis, you can also see this on a portfolio level as well. The capture ratios, up capture ratio as well as the down capture ratio. Now I again move back to the compare section. Next, I move to the risk versus return scatter plot. So this is a scatter plot wherein on the x-axis, we can see in standard deviation, which is basically annualized risk. And on the y-axis, we can see in annualized return. And the entire scatter plot is divided into 4 quadrants: low risk, high return, low risk, low return, high risk, low return, and high risk, high return. Now, if any fund is getting plotted on this right-hand side of this scatter plot, we would say that those are the ones which have higher level of risk in comparison to the ones which would get plotted on this left-hand side. Those would have lower level of risk. And in a similar manner, if a fund gets plotted on this upper end of the y-axis, we would say those are the ones which would have higher level of return. In comparison, if fund gets plotted on this lower end of y-axis, they would have lower level of return. Now, the time period that we are considering is also crucial at the moment. Now, let's say maybe in this 14-year time duration that you could see, maybe I locate these two funds, iPro Blue Chip and Kotak Blue Chip. Now, if we see the risk percentage for these two funds are near to each other, but the return that has been generated by iPro Blue Chip is higher than that of Kotak Blue Chip. Meaning this would help you to determine, let's say 2 or more funds have similar level of risk. What is the difference in their return generation capacity? Now, let's say I just change this time duration to maybe the last 3 years. Right. So we see that iPro has rather moved towards the left-hand side top corner, meaning currently for the last 3 years, if you are locating, it is taking up lower level of risk, but at the same time, it is generating higher level of return. So you could use this scatter plot by changing in the time duration. You could simply see how the funds have moved in terms of its risk and return as a parameter. Next topic, I just move on to this drawdowns tab. So this tab would basically let us know how quickly a specific fund has recovered from any loss that has occurred. Now, every tab that I go on, you would see that this 20 August 2010 is the start date, be it risk versus return scatter plot or the drawdowns tab or the rolling returns tab. Now, this is taken up based on the age of the youngest fund that I have currently taken in the main list. So I just go to the main list. Right. So you can see the age of the youngest fund. Based on the age of the youngest fund, the start date is automatically picked up so that we could have in a minimum common time period for the purpose of analysis. Now, this start date is anytime changeable. So this drawdown tab, as I was mentioning, lets us know how quickly a fund has recovered from any loss that it has experienced. Now, next to the name of each fund, you can just click on this history icon. So it tells you in detail how the fund NAV has moved and how quickly the NAV recovered from any loss that happened. So I have loaded in Mirai Asset Large Cap Fund, and the top 5 losses for this fund is what we can see. The highest loss being on the top. So 37% was the loss experienced by this fund, wherein the start price of this fund was at 55 rupees and this NAV started falling down and it reached a price of 34 rupees. So this loss or rather downfall in terms of its NAV happened during the COVID period. We can see 16th Jan 2020 to 23rd March 2020. So basically during the COVID period, the NAV of this fund started falling. Now post this date of 23rd March 2020, it took a total of 165 days for this fund to recover, meaning it took a total of 165 days for this fund to cross this start price. Only then we can say that the fund has completely recovered from this loss of 37%. And the complete recovery happened on 9th November 2020. You can also see the movement of these funds on this line graph. The white region shows an up movement, while the gray region shows a down movement, mainly when the NAV of the fund was moving down. Now, let's say I just change this time duration to maybe the last 5 years. And I just saw this on the basis of recovery. So I can see that there are these 4 funds that have recovered quickly than Nifty 100 in terms of its worst drawdown. So currently we are focusing on this worst drawdown, and it is suggesting that there are 4 funds, Canara, Kotak, Mirai and Axis. They have recovered quickly in terms of its worst drawdown when you compare it with that of the benchmark Nifty 100. Now what you see right here, 33, length. This is basically the time duration when the loss existed. Meaning, if I just click on this history icon, the time duration between 19th Feb 2020 to 23rd March 2020, that is equivalent to 33. That is what has been mentioned right here. You can sort the data on any basis, on the size, on basis of its length, on basis of its recovery. That is possible. Now, this was a drawdown wherein you were comparing funds with each other. You can also view drawdown on a single fund level as well as on a portfolio level. So for a single fund, this is a fund that is loaded in the tab. I just go to this drawdowns tab. So once you load in a single fund, you will be able to see in the top 10 drawdowns that was experienced. And the analysis remains exactly the same, how quickly the fund recovered from any loss that occurred. The next topic for the day is this rolling returns tab, which basically tells us the consistency of the funds that we have loaded currently in the main list. So what we can see right here is the rolling window, and it has been mentioned as 260. Now 260 is equivalent to 1 year on the platform, meaning 260 working days. Now this rolling window is editable at any time. You can just multiply the number of years into 260. Let's say a 2-year rolling window, you just multiply 260 into 2 and you can just input 520 right here. Let's say I just change this rolling window. I just input 520 and I click on run. So this average column, this basically tells me, let's say a specific investor has stayed invested in Mirai Asset Large Cap Fund for any 2 years from the start date of 2010 to 2024 May. If the investor stays invested in any 2 years in this fund of Mirai Asset, their average return would be 15% from this specific fund. Now, how has this average been calculated right here? It is basically the average of all the data points that you could see on this line graph. Now, let's say I just hover my cursor on the very first data point right here. So this says iPro Blue Chip Fund, 17th August 2020 3.9. Meaning, if any investor would have invested in iPro Blue Chip Fund exactly 520 days prior to 17th August 2020. So that would be our start date, 20th August 2010. So the time gap between 20th August 2010 and 17th August 2012 is exactly 520 days, 2-year time duration. So the return generation by that specific investor investing in iPro Blue Chip for a total of 520 days would be 3.98%. Now I keep my cursor on any of this data point. It's suggesting Axis Blue Chip Fund 17th March 2014. Meaning if an investor keeps invested in this specific fund, Axis Blue Chip Fund, exactly 520 days prior to 17th March 2014, their return generation would have been 16.45%. Now you can see the volatility that was experienced by that specific fund in that rolling window, as well as the highest as well as the lowest return that was generated during that rolling window. Then what we could see is this positive percentage column. So this column basically tells us what is the probability of a specific fund to generate positive return, considering that there are only two quadrants, positive and negative. So meaning, let's say I just locate at this 97%, iPro Blue Chip. So this is suggesting that 97% of times this fund has generated positive return in a 520-day rolling window. Next, what we have is this rolling returns distribution tab, which basically lets you create your customized return range, meaning as per your client's requirement, you could create in return ranges and just check the probability of the fund to generate return in that return range. Let's say I just edit this return range and I create my return range of 10% to maybe a 25%. Right here. So this is telling me that 61% of times, the highest, 61% of times, iPro Blue Chip has backtested to generate returns between 10 to 25% in a 520-day rolling window. Now, this was while we were comparing funds with each other. You can also view this rolling window tab on a portfolio level as well as on a single fund level. So this is a single fund that I had loaded onto the system. I just go to this rolling returns tab. And on a fund level as well as on a portfolio level, you can compare the performance of 3 rolling windows simultaneously. 260, 520, and 780 is what gets generated by default. These are anytime editable. As I mentioned, you can just change it by multiplying 260 into the number of years. And as well, on a portfolio level and a fund level, we have this return ranges that could be created to see the probability of a fund or a portfolio to backtest and see the probability to generate return between that return range. Now, this was on a specific fund level. I could also load in a portfolio. Yeah. So the rolling returns tab, this is on a portfolio level now. These windows are also editable. Now, let's say I just try to change this window to maybe a 520-day rolling window and see the probability of the portfolio to generate a return between maybe a 10% to a 30% hypothetical. So this is telling me that the portfolio has backtested 84% of times to generate return between 10 to 30% in a 520-day rolling window. So such rolling analysis can also be done on a portfolio level. And as well, we have this drawdown tab on the portfolio level too, which tells you now on a portfolio level how the portfolio recovered quickly or how quickly the portfolio recovered from any loss that has occurred. And now this portfolio level NAV that you see is basically achieved by multiplying the NAV of each fund with its weightage in the portfolio. That is how we come or rather reach at this portfolio level price. Now, the meaning remains exactly the same, what we had seen in the compare section while comparing funds. On a portfolio level, what we can see are the top 10 drawdowns. So that is it for the topic related webinar. If anyone has any query, they can either unmute themselves or write down their query in the chat box.
I had a query regarding, so when we are looking at the portfolio, right, and you're talking about the scatter plot, is there any functionality where when you're looking at risk and return, the portfolio risk and return, if it can be captured in that scatter plot?
You're talking about the risk and return scatter plot, right?
Yes.
So that's in the compare section. And you want to capture it where?
No, I'm saying, yeah. So right now the issue is that, see, in the compare section you have that functionality, but then when I'm creating the portfolio, right, if I want to show the client as opposed to having individual funds, if I'm creating that portfolio, then how is his risk and reward getting mapped out? That would be a interesting.
Oh, right. Yes.
Yeah.
This is we are actually we're almost done adding this tab, so this should be there in the next release. So risk versus return, what you see in the compare section, that will start showing up as another tab when you run portfolio analytics. So that's definitely coming.
Okay. And second thing, what I wanted was looking forward to, if it could be a part of it, is that when you're looking at portfolio drawdowns, right?
Yeah.
You are looking at it as a static lump sum figure, right?
That's
So
right.
if there can be, and so there is the functionality wherein on a individual fund level, you can see what the SIP is. So you can actually see the drawdown. If you're doing a SIP, then what will be it? It normally it reduces the time.
Yeah.
So on a portfolio level, if you can have that kind of a SIP to help, because what happens is when you're showing a client that 140 days is going to remain a negative, even though you know it's going to be positive, it's still an impact. So if you can show SIP of that portfolio, it will drop, that number will drop, the days will drop down a lot, right? So that should help.
Well, yeah, I mean the days may or may not drop depending on
The
when
time
the
period.
happened, right? Yeah. But so if I understand correctly, you basically want to see a SIP of this portfolio line. Is that right?
So exactly. So I'm saying that if in on the portfolio level you can see that there is a drop down of 37% for whatever period of time. If you
Yeah.
can also show an alternate to the client saying that on this portfolio, if you are doing a SIP, then the impact is much lesser and you will be out of the negative sooner. That kind of a thing.
Well, the issue with that is that the return or the loss percentage would still be the same because if you put 10,000 this month and 10,000 next month, the first month it will lose only on 10,000. But during that month, you didn't have the other 10,000 invested, right? So the return numbers will not change because of an SIP.
No, so in the downside it won't, but when there is the up, when it starts correcting back up, then it will be
Oh,
much
right.
faster, right? The
So,
progression.
yeah. To be honest with you, it will work the other way around also because if you look at any drawdown before that, you can see a rising period. So you will be investing in the highs before the drawdowns hit, right?
Yes.
So unless you start the SIP right at the bottom of a drawdown or just before the drawdown starts, if you start the SIP then this
Yeah.
will work. But if you started, let's say in January 2021, you will keep investing all the way to the first drawdown hits, and then the loss will be quite big. So I mean, we can try to see how to present it, but it'll be hard to
Usually
show
when
it.
the because when there is a drop, right? So when there's a correction, the correction is very abrupt, right? Then the recovery might be slower or it might take time. So actually it should help to show it in the positive, because we have tried to do that analysis with using Excel, but it's becomes difficult to do it every time. It's very time consuming.
Well, generally speaking, an SIP can never outperform a lump sum investment. Because at
Sure.
the end of the
Yeah.
day, if your line is upward sloping,
Sure.
whichever way you look at it, a lump sum is always better
Uh,
return
uh,
wise. Because Because if you invest later, at some point you're going to invest in a higher number than the start point. In fact, if you look at this chart right now, you might get some nice entry points around 2020. But after that, all of the other entry points, even if they're after a drawdown, will be worse than the start point. So, I mean, from a return perspective, the SIP will always show less. And the problem with that is that when we're calculating return, what do we think of as the denominator? Because you might make some money, lose some money, but that is a percentage of what, right? Because that also confuses things, right? Because do we consider the money you are going to put later on, or do we only consider the money that you have put so far?
Yeah. Sure. Yeah.
Fine. We can try some. I mean, we can try some analysis here. I mean, we obviously have the single fund SIP, SIP tool here, but we can try to see what it looks like in the case of portfolios, if it makes any difference.
Sure. Thanks.
Good afternoon, Arnav.
Yes,
this is
hello.
Ranjit here.
Hi, sir.
And thank you to you and to your team for really elaborate explanation and this training. Now I have a question related to the comparison and essentially the decision-making process, how to arrive on the best fund amongst all the choices that I am comparing. So for that now, let's take one example that let's say we have X, Y, and Z, 3 funds in the comparison screen. And then if I start like comparing all different parameters where various options are available on your platform, then I'll see like for up capture, X fund is better. For down capture, let's say Y fund is better. For rolling returns for 260 days, 520 days, whatever, some other fund is better. So it means what? Each fund is going to be good or bad for various parameters. Now, is there any process or is there any way available in your platform where I will start like marking best in class, or can be like my own 1, 2, 3 means like the rank, let's say 1, 2, 3. Then at the end of my exercise, someone should be able to see like X fund is best in class in 10 parameters out of 15 that I compared, and the Y is somewhere else, and the Z is. And based on that, what I'm trying to explain is the decision-making process. But all these otherwise can be done manually also very easily. But in your tool itself, then it will be extremely easy.
Sure. So we've done a kind of already constructed version of that, which is what the fund score is. It takes about 3 or 4 parameters. But I believe what you're talking about is the ability to kind of select your own parameters and then and apply some weights to them. Because right now, when you look at the fund score, that's a fixed process that is applied to all funds across the board. So currently, we don't really have a method where you can play around with these numbers. I believe once that is opened up, then we'll be able to show it. So we do have the scores in the background because they are used to calculate the score. So I'm not sure if this work is scheduled yet, but I believe in the future we're going to basically open this up so you can create your own score, basically, right? With what you think is important, because scoring methodology.
Exactly. Because each individual will have his own appetite. Maybe someone is averse for this, someone is more inclined towards the returns, or can be whatever. But then it means your methodology, although it's very good, but it's all standardized methodology. But instead of that, individual's outlook is even more important to be comfortable to select that as.
Yeah. So, so this is not something we have done so far, but I mean, we can do it because, as I said, all the statistics that you look at, and so if you just go back to the main page to the screener, so technically speaking, we actually in the background have scores individually for all these stats that you see. If you scroll right, everything that you see here, we have a score for them. So then all we need to do is build your front end where you can, let's say, put weightages on each of those scores as per your requirement. And that will then create a customized fund score for you, basically.
Yeah, exactly. I think essentially you have everything that is needed, but what is missing probably is just one, whatever, I mean, little bit enhancement to bring all these squares of my choice in one place in order to compare. That will be really great if you add this over a period of time.
Yeah, no, I'm sure we'll be able to do it. It's just a matter of kind of fitting it in with the current work we're doing. But yes, we'll definitely get to it.
Thank you very much. Thank you.
Thank you.
Yeah, hi. I've posted my question on the
Yes,
chat bar.
hi. Yeah. So Kotak multi-cap, can you just load Kotak multi-cap answer? The performance page. Sorry, what was the? Okay, in mid cap. Sorry, got returned. Okay, so this is you're saying the asset allocation is not matching.
Yes, because
Okay,
in fact
try,
it shows because
just try
it's a multi.
percentage of portfolio, percentage of equity part only. Okay, so this could be because of slightly different definitions of which funds, which stocks are large versus mid. So just if
Also in many of the multi-cap, this issue is coming in ICICI multi-cap and White Oak multi-cap.
okay, so this could have to do with the definition of stocks, which they are updated on a daily basis from our data provider. So if you just go to overview inside asset allocation and just download this Excel. Just open it for a second.
Because in multi-cap it is compulsory to keep 25% in each of the category, right?
Yeah, I mean, what we'll do is we'll check if any of the stock definitions are stale. That would be the only reason this would happen.
Okay.
Yeah, just okay. We'll check it out. We'll check it out and let you know.
Yeah, okay, thank you.
There's a question on the chat from Sapnil Shah about accuracy. Look, I mean, we provide straightforward answers to any questions about what we are calculating. So if you have a specific issue, please let us know. We'll tell you. But I mean, generally speaking, we have over 1,000 users. We have most of your major AMCs, fund managers, as well as banks using our platform on a daily basis. So if you have any issues, let us know and we'll respond to that. But you know, all our calculations are standardized. So if you look at a Sharpe ratio, if you look at a correlation number and you don't think it's right, we will send you an Excel back with exactly how we calculate it. Most of the time, by the way, the differences come because the method of calculation is different. So, you know, we stand by what we use for calculations. So, as I said, if you have questions about anything, just let us know. We'll respond in a transparent manner. Someone will get in touch with you. So if someone from the team can take their name down, we can let you know.
Yes, sir.
Any other questions, please let us know.
Yeah, actually I would also like to have a number of any some RM or something because we can't connect to any number.
You could just call the number on our website. If you obviously you can always write to our support email. If not, well, I'll just tell you the number right now. Ansu, if you could just
Yes,
bring up
I
the
could
website.
just type it in the chat box.
Yeah,
Just a minute.
yeah. You can just call us on our this is our Mumbai office.
Yeah, okay. Thank you.
Thank you. Any other questions? Please let us know. Okay. If there's nothing else, Ansu, we can close for today.
Yes, sir. Thank you all for joining in. You can anytime visit our YouTube page. There would be a playlist which would have recordings of all the webinars that have been conducted up until last Friday. This week's webinar will also get uploaded. You can see a total of 111 webinars have gotten uploaded as of yet. Thank you all for joining in. Hope to see you again next week with a new topic. Thank you.
Thank you.